Every time a property closes, a mountain of paperwork follows. You have closing statements, escrow receipts, and referral agreements piling up until your administrative processes collapse under their own weight. To figure out who gets paid what, you have to manually extract the gross commission from the closing statement. Then you calculate the specific percentage going to your broker and subtract any referral fees owed to outside agents. If you forget to track those external referral payments, you create a compliance issue. The IRS requires you to issue a 1099 NEC, a tax form for non-employee compensation, to any partner who receives over $600 in a calendar year. Relying on spreadsheets and paper to track these splits leads to misplaced decimal points and categorization mistakes. Over dozens of transactions, these manual calculations compounding into tax liabilities and operational bottlenecks. We can solve this by building an automated orchestration layer. Instead of typing out data, you simply drag your PDF closing statement into an AI interface, and the system handles the reconciliation. This diagram shows how the AI processes that PDF. The central document converts into 3 distinct actions. It creates an invoice for the gross amount, generates expense records for the splits, and updates your 1099 tracking ledger. By handing the data extraction and calculation over to the AI, a process that used to demand 45 minutes of manual data entry becomes a 2-minute verification check. For the AI to categorize this data correctly, it needs a predictable target. We start by building a rigid chart of accounts, a structured list of all the specific financial categories your business uses inside QuickBooks. This diagram illustrates the strict separation required in those accounts. The large bucket represents your gross commission income. As it fills up, it pours the exact owed amounts into smaller, separate buckets, designated strictly for your broker split and referral fee expenses. This is a view of the vendor profile page in QuickBooks. You must check the box labeled Track Payments for 1099 to ensure the software actively aggregates every referral payment made to this specific partner. Establishing this predictable foundational data structure gives the AI a map to follow. Without this structure, the system would guess where to put the money, leading to cascading categorization errors. With QuickBooks Ready, we instruct the AI using a structured extraction prompt. This tells the language model exactly which variables to pull from the unstructured text of the PDF, like the sale price and the gross commission percentage. We then code your specific business rules directly into the system, such as a fixed 25% broker split. Providing these exact formulas prevents the AI from attempting to guess how the money should be distributed. To connect the AI to your accounting software, you use OAuth credentials, sensitive authorization data that serves as your primary permission layer. You must never paste these credentials directly into a language model interface. This diagram details the correct security architecture. Claude AI sends a generic data packet to a separate proxy server. The proxy server, acting as a secure middleman, appends the OAuth token to the data packet before transmitting it to the QuickBooks API. Routing your data through this secure middle layer insulates your financial credentials from external language models. This creates a reliable, enterprise-grade automation pipeline. Let's walk through the exact sequence the AI triggers when a closing statement arrives. First, it reads the document and extracts the property address and the total sale price. This timeline graphic shows the API execution sequence. The system first hits the /customer endpoint, which creates a new entry in your database, specifically for that property address. The sequence then advances to the second node. The system calls the /invoice endpoint, formally linking the gross commission dollar amount directly to that newly created property profile. Finally, the sequence triggers the third node. The system calls the /purchase endpoint, recording the calculated broker and referral splits as distinct outbound payments. By converting a simple text document into a strict sequence of programmed commands, the system guarantees balanced accounting ledgers, requiring zero human intervention. The final operational step is verifying that the automated accounting entries match the actual physical deposit landing in your bank account from the escrow company. There is a timing mismatch here. You record the gross income on the day the property closes, but the cash basis physical deposit from escrow takes 3 to 5 business days to clear. This diagram demonstrates how the system calculates the exact expected net income. It balances the large $15,000 gross invoice block on one side by mathematically subtracting the split blocks for the broker and the referral, leaving a precise expected net deposit of $9,750. When that exact $9,750 deposit finally appears in your bank feed, the system recognizes the amount. You simply confirm the match, and the transaction is closed out and reconciled. Because the system tagged your referral partners initially, this dashboard shows your vendor profiles automatically updating to a green compliant indicator in the background. This eliminates the need for vendor audits at the end of the year. You replace chaotic administrative cross-checking, letting the system straighten out the data with automated mathematical precision. By building a structured data model and routing documents through a secure AI proxy changes the operational baseline of your business, removing administrative friction, ensuring tax compliance, and revealing true profit margins.